And joining me from Chicago is James Bianco, the president of Bianco Research. Many thanks for joining me this morning and this evening for you, James. Obviously, Italy and the Chinese buying Italian bonds, that story really rallying even US stocks. I mean, what do you think is behind the other rest of the sentiment that is driving this volatile thought?
Well, right now the story in the United States is all about Europe and whether or not there is going to be a Greek default in Contagion or not going to be a Greek default in Contagion. And the idea that the Chinese might step up and buy some Italian bonds at least puts to a halt the idea of Contagion, and the market responded positively to it. It makes sense that the market would rally off a story like that. The big question is whether or not they actually follow through and actually buy Italian bonds.
But the idea of China actually buying into Europe again, obviously for an Asian investor that's quite a big deal because China's been buying Czech bonds, Spanish bonds, and now looking towards Italy.
Yeah, that's right. This would not be new for China. But the big question, I think, where the market might be a little bit ahead of himself is how much is China going to buy? The rally today was almost predicated on the idea that China was going to fund Italy for the next several months or years. And I don't think that that was ever in the cards. It was that they would be a participant in any kind of a bond deal they have. And there's still no word about what the Italians will do to get that participation. How much austerity are they going to agree to? They're obviously not going to agree to no austerity. So there's still a lot of open questions on this rumor that we had that at least gave us a lift late in the afternoon.
James, how do you as an investor, for your clients as well, how do you trade this very volatile market now? Clearly, US market this week, looking to retail sales, PPI, CPI, all those numbers coming out. Then, of course, the Fed meeting, but also Europe's mired in debt, the US is mired in debt, Asia's the growth story, but certainly it's very hard, isn't it, to invest. Where would you look? Which asset class are you looking for the valuation?
Well, on this last part, it is very hard to invest because all of the markets are very correlated with each other. There almost isn't an asset class anymore. It's what Wall Street calls the risk-on and the risk-off trade. You're either betting that everything's going to be okay and you'd be long stocks and you'd be long credit, or you're betting that everything has still got problems and you'd be long Treasury bonds and bills and you'd be long gold. I'm still in the risk-off camp. I still think that the economy's struggling. I give you better than a 50% chance that there's going to be a recession. I think that these problems in Europe are still not being dealt with, at least to the extent where we can see a light at the end of the tunnel. So I would be in a very defensive mode. And the problem there is that it affects all asset classes. So risk off is the way to go. If you're more speculative, you could be long gold. If you want to be less speculative, you could be long Treasury securities.
And James, you've got PIMCO saying equities offer good value, valuations are low, income growth is strong, dividends are good. Also, PIMCO increasing their US Treasury holdings to 16 from 10%. So therefore, bonds or stocks?
Well, I would probably favor bonds. But PIMCO's right about that valuations look very good under one assumption, that the current estimate for earnings is going to become reality. If we have a recession or anything close to a recession, history shows us that Wall Street can not only miss earnings when we have a recession, but be way off on earnings. 25%, 30%, 35% is not uncommon of a miss when we have a recession in earnings. So all of a sudden, an 1100 or 1150 S&P that looks cheap now might be expensive if we have a 30% hit on earnings. So it really all comes down to your economic forecast. And since mine is a 51% chance of a recession, I will probably take the defensive side of that trade.
James, final question for you. How are the US investors reacting, do you think? You call Europe a mess. What is the story, your thoughts on Greece? Will they default, and what will that mean for investors in the US?
I think Greece is a fait accompli, that they're going to default. The markets are pricing in almost near certainty that they're going to default. But I think what investors are looking is they're looking past Greece. Okay, Greece is going to default. Who goes next? Does Portugal, does Ireland follow? Does the contagion sweep up into Spain or Italy? Who's going to bail out the banks? The Germans said that they had a plan B. But what about the French banks and the Italian banks and the Irish banks? Who's going to be their plan B? That's what investors are looking at. And right now, none of those questions have been answered. And that's why I think a defensive posture is the best place to go.
Thank you for your time. James Bianco there, the president of Bianco Research. Many thanks for joining us this morning.